All right, we're talking stocks with Jim Paulson, Peter Schiff, and Jerry Boyd. Jerry Boyd, I want to come back to this. Since the election, stocks are down about 22% by my math. Gold is up 30%. Peter Schiff's jumping for joy on that. You've had the stimulus package was signed. The first Geithner speech on the bank bailout, which was kind of a disaster. Right. Today was the mortgage bailout. At least stocks didn't go down 400, but they didn't go up much. A lot of rumors about bank nationalization, the Swedish model. America's not Sweden. Jerry, my question is the market worried that politically and economic policy terms are moving to the left, that there's too much big government, that the cures are much worse than the disease?
Every investor I know is worried about exactly that. And while the crowd was cheering today when President Obama was speaking at that school, raging against bondholders and banks and real estate speculators, those awful real estate speculators, the market was booing. The people who actually hold those securities, the people who actually hold financials, the people who actually own home builders were booing this populist left stuff. And for the president to do that, instead of in a somber press conference, to do that in front of cheering crowds, to talk about forcibly reopening our bond covenants, our contracts, and taking away the property rights that investors have in those, I thought was an absolutely horrible signal.
By the way,
he has sent nothing but horrible signals since
he's been in office. Just as a quick one, we didn't really talk about this too much in our earlier segment, this mortgage cram down thing. So now bankruptcy judges replace private property, private contracts, the rule of law, common law heritage, the Magna Carta, the Declaration of Independence. What is this all about?
In the end, Larry, the only one that's going to be willing to write a mortgage is going to be the U.S. government, because nobody's going to want to lend money to anybody to buy homes because it's going to be too risky.
You know, I think that's a great point, that the only one's going to write a mortgage is the U.S. government.
You know, and Obama slammed Hillary for suggesting this stuff during the primary fight.
I remember that. So, Peter, you've had all these. All right, we have a stimulus package, Peter. I'm sure you love it. We also have the mortgage bailout plan today, the Geithner, whatever it was, last week. What do you make of this? How important is the politics of the economy in relation to the stock market?
Well, it's very important, because the politics is what's killing the economy. I mean, you hit the nail on the head when you're saying that the cure is worse than the disease. The worst part about it is the government infected us with the disease. Now they're killing us with the cure. You know, we talked a little bit before the break about where's the bottom in the economy. Well, one thing is for sure, the economy can't bottom out until we purge all these malinvestments from the system. The government is drawing out this process. It is ensuring that whenever the economy bottoms, it's that much further into the future and it's that much lower.
So we should let markets work. That's been my plea all day, Jim Paulson. Why is it that we are deserting markets here all of a sudden in favor of all this government controlling and tinkering and fine-tuning and abrogating of contracts?
It's all because of politics.
Jim Paulson, get in here.
I guess I'm not so sure it's so much about left-wing populists. I think that's a problem. Here's the biggest thing I think we're dealing with this year is we're dealing with a government-created run on the bank stocks. Imagine if at the end of last year the leadership of this country, from the president to congressional leaders to policy officials, started a public debate about whether we should close the stock market for a month until things settle down. The market would collapse. Well, that's exactly what they did for bank stocks. They basically said, should we nationalize them and bankrupt the shareholders? Well, guess what? That eliminated any bank stock buyers and accelerated the sellers. And tonight, the S&P 500 financial stocks are off 38% year to date. I don't think the fundamentals of the banking industry deteriorated by 40% in the first month and a half of this year.
So you're saying the government
I think it's government created.
Yeah, they ought to just keep their yap shut for a while and let people sell the assets and be done with it.
I already think, though, if the Fed didn't buy up so much of this toxic stuff already, most of these banks you're talking about would have already failed.
Well, okay.
I disagree, Peter.
Go ahead,
I disagree.
Jim.
I think there's more good assets on the balance sheets of banks that are woefully undervalued because of mark-to-market than there is bad assets that are still overpriced.
Well, the problem isn't mark-to-market. The problem is the market. They're marking them to reality.
The problem is mark-to-market. The problem is mark-to-market is an accounting distortion. It does not tell the truth. It reveals less than actually mark-to-model would. And you have a situation where the mark-to-market regulators are pushing down asset values with one hand, while then the taxpayers are pushing up those same asset values with the other hand. And we can never win that.
I don't want to get too hung up on this. Jerry Boyd, though, let me follow through. Our friend Brian Westbury, a smart guy, frequent guest here, great friend. Brian acknowledges all the problems with government policy drift to the left that you all are talking about. But he concludes in his piece this week that because of the big expansion of the money supply, we are going to have a recovery, and the stock market is going to have a cyclical rise. Do you agree with our friend Westbury, Jerry?
I do. I think that we've seen the healing of those spreads, so the money will flow. That will be a recovery. It won't be a great recovery. You have the tax cut from low energy prices and low commodity prices across the board. It's not going to be a great recovery. It's not going to be a great rally, but it's going to be a recovery.
The stimulus package did not raise marginal tax rates yet. Jim Paulson, let me come back to you. Roche gives a $16 billion corporate bond offering today, a six-part offering to buy Genentech. And we've had terrific life in the corporate bond market. Corporate bond yields are just under 8%. They're down about 150 basis points, Jim. Do you like the corporate bond market, and is that a harbinger of a better stock market?
I do. I think you got great spreads there that are still much wider than they should be to treasuries, and I think the fact that they're coming in does say something that about the economy is going to start to bottom out maybe in the second quarter.
All right, Peter Schiff, favorite investment. I'm going to give you 7 seconds. One favorite investment.
Well, gold, silver, and that's what you can buy.
It's the year to date. Jim Paulson, Peter Schiff, Jerry Bowyer. Thank you, gentlemen.